Well, trade talks between the U.S. and China have grown even more tense as the U.S. imposes new tariffs. Tyler Orton with Business in Vancouver is joining us now with more and really upping the amount of tariffs on $200 billion worth of Chinese goods. But I think a lot of Canadians wondering how this might impact us here.
Yeah, and I have to emphasize this won't be contained to just the U.S. and Chinese economies because, look, you take a look at sales dropping off on consumers in the United States. That means it's putting pressure on those American firms to hike prices, and that would eventually trickle down to Canadian consumers who'd have to pay more for consumer goods like electronics or even just food items. Now, perhaps more significantly for the overall Canadian economy is that such a trade war disrupts supply chains, and Canada and the United States have some of the most integrated supply chains in the world. So if an American importer is suddenly forced to pay these tariffs on Chinese goods before the items are manufactured and then sent off to Canada, this creates a lot of problems for Canadian manufacturers further down the road. Furthermore, a trade war like this, it dampens overall global economic activity. So Canadian infrastructure, energy producers, mining companies, they could all be dramatically affected by what's going to play out next.
All right, certainly, yeah. Everyone's walking on eggshells right now.
I feel it, yeah.
Okay, another story today, Uber going public. What's the stock going to be priced at here?
Yeah, so it's priced at about $45 per share. That's implying an $82 billion U.S. market valuation, and it's actually on the low end of a range of what analysts were expecting. But just take a look at Lyft's financials after it went public last month. It shows that the company's actually bleeding money with a net loss of $234 million. And Uber is a much larger company, but it's not profitable either. So now that both Lyft and Uber are these publicly traded companies, they're going to be under increased pressure from shareholders to turn a profit, which most likely means prices would go up for consumers. So they've embedded themselves in the daily lives of people, at least outside of British Columbia. So that means that they can actually withstand any sort of price hikes because consumers are so dependent on those services. I just think that's the gravy train for a lot of people right now, likely coming to an end because of this increased pressure from shareholders moving forward.
For sure. And then there's also the increased pressure from drivers who are striking, demanding higher wages.
Yeah, and I always get funny looks when I talk about this, but Uber and Lyft are going big into autonomous vehicles. That's going to be further down the road, but this is putting pressure on maybe what the job situation is going to be. I would guess down the road it means fewer jobs associated with Uber and Lyft services.
Got it. All right. Tyler Orton with Business in Vancouver on this Friday. Thanks, Tyler.
Thank you, Sonia.